Hello everyone and welcome to this year's Future of Payments launch. I'm Katie-Ann Wilson, Managing Director of the Digital Monetary Institute, and this year's Future of Payments report focuses specifically on challenges for cross-border payments in emerging market countries. For the first time ever, we're thrilled to also do a survey on central bank attitude and intentions regarding CBDC. This is an annual report that we do. This is the third year running, and we're always extremely proud and privileged that this report allows us to bring together leading voices from across the payments industry. So I just want to take a moment to thank our partners, AWS, Binance, Bit, Flutterwave, Payoneer, RTGS, Swift, and Visa for their collaboration and excellent thought leadership in producing this report. So today we have an extensive audience of central bankers, technology providers, commercial banks, financial services providers, and more. So please do let us know if you have any questions at all. Just post them in the chat and we'll try and get to them towards the end. We'll kick off this event with Julian Jacobs. He's an economist at OMFIF who has been gathering and analysing the key findings from the survey. So before we kick off with the launch panel, I would just like to hand over to Julian. Thanks, Julian.
Thanks, Katie-Ann, for that introduction. So I'm Julian Jacobs. I'm an economist here at OMFIF, and I'll be delivering the key findings from our 2022 report. And this year's study considers the role broadly of emerging technologies in shaping the future of payments. So to get us started, I think this year we really want to begin by considering the current innovations in digital finance and really thinking about what do they signal about the role of digital assets in the development of future payments processing. And we paid particular attention to CBDCs and stablecoins, but in our report, we really go way beyond that too. Now, why is this such an important area to look at to begin with? Well, there are a few reasons for that. So first, changes in the way payments are done may help overcome some of the considerable fees for cross-border payments that are currently present and often only make cross-border payments feasible for dealing with large sums of money. And this is particularly true in emerging markets. And so at the moment, the cost of cross-border payments too often falls on people who are least able to afford it. The future of payments, therefore, is firmly connected with broader goals around inclusion and remittances, which cross-border payments might make more affordable and efficient. But more broadly, this report really deals with concerns around payment systems and how they can be used to strengthen financial inclusion by bringing people into the banking system who are traditionally outside of it. And so we additionally look at the payments in that space, and we also look at the future of payments with respect to the digital space, such as the metaverse, which is really at the frontiers of some of these changing dynamics about the future of payments. And this partly also explains why we spend so much time discussing CBDCs and stablecoins. Now, to answer some of these key questions about what the trajectory is for the future of payments, we use a combination of desk research and surveys. So our results are drawn both from that desk research, but additionally from responses that we received from 18 central banks. Now, turning to our findings, we'll begin by showing what central banks are saying about the move towards central bank digital currencies. And here we can see that central banks are interested in CBDCs for their benefits to efficiency, inclusion, and oversight. It's important to note here that the relatively high selection of other in this chart it points toward the fact that central banks' interest in CBDC, it really comes from a myriad of objectives, the most significant of which is financial inclusion, efficiency, and preserving banks' role in the money provision. And on that efficiency point, our report discusses data showing that CBDCs could improve cost efficiency by about 50%. And beyond that, CBDCs can improve inclusion by also allowing for more direct transfers to individuals who need aid, as we briefly mentioned earlier. And this is particularly true in lower income countries and among lower income individuals. So, for example, we note in our report that 35% of low-income adults who opened their first bank account, they did so to receive government payments and typically government welfare payments. But beyond that, it's also interesting here that in this chart, no respondents mentioned that cross-border payments were the key benefit that they anticipated from CBDC. And we'll come back to that point a little bit later. But it is worth caveating there that some of the benefits of improved cross-border payment might be captured in the inclusion piece through lower barriers to transfer money abroad, which helps to support remittances and, in general, a broadening of access to digital payment services, which will reduce a reliance on cash. Now, outside of the survey data, our report also discusses the role of new payments in stamping out the illicit economy. Now, about 2 to 5% of global GDP is currently hidden from taxation. And CBDCs might support greater oversight of that otherwise hidden cash. Now, given these benefits, what actually is the timeline of a CBDC actually getting deployed? And what are central banks' expectations around when they'll actually be able to launch a CBDC? And this is what we show in this chart right here. So first, we note that there are some countries that have already launched a CBDC, and that includes the Bahamas, it includes Nigeria, Jamaica, and the Eastern Caribbean states. Among our survey respondents, however, we see that central banks are expecting to issue a CBDC at some point within the next 10 years. But the nature of this CBDC, it varies considerably. So though some respondents discuss the possibility of a fully integrated CBDC in the fully integrated retail CBDC, I should say, others discuss pilots or more limited experimental launches. And this variation, what it really tells us is that there is a general caution among central banks, particularly in developed countries around the CBDC. And it speaks towards this sense that central banks and countries in general really want to first test a CBDC and study it to make sure that they are getting it right. So, generally just there's some broad concern here about moving too quickly with the CBDC, and also a bit of concern too about possible redundancy of a CBDC with existing infrastructure. Now, in this next chart, we look at central banks' uncertainty in greater detail. And we see here that it takes on a number of forms. So chief among them, we see here on that left-hand bar is concern around, well, first, reputational risks that might emerge from low adoption, but immediately to the left of that, central bank respondents are clearly concerned that cybersecurity would need to be bolstered from their end in order to protect consumers and just generally preserve the value of a CBDC. And as mentioned in the last slide, there is a sense too that a CBDC might be redundant with existing infrastructure. So one good example of that is Germany has distributed ledgers for securities exchanges. And some German policymakers argue that the existence of such ledgers might make a CBDC redundant. But additionally, outside of the survey, our report also considers the broader literature. It warns about concerns about government oversight, since a CBDC would theoretically offer governments limitless access and control over the economy and oversight over the transactions taking place within it. And finally, our report also discusses in detail the pretty substantive concerns around financial instability, which might emerge through an improved ability to rapidly substitute one currency for another. And this entails the possibility of potentially rapidly fluctuating swings in the value of a currency. And so in general, we look at these responses and see that there is considerable theoretical promise of a CBDC, but despite that, there's clear caution among our central bank survey respondents. And such caution is also pronounced and potentially even more pronounced with respect to stablecoins, which is in line with expectations that we had going into this. And we show central banks' perceptions of stablecoins in this chart right here. And we can say that first, despite a a general sense that central banks are skeptical, we also note that central banks really do seem to acknowledge the potential benefits of stablecoins, particularly in making cross-border payments more efficient. And this is an interesting point to consider, given, right, that earlier in this key findings presentation, we saw that respondents chose cross-border payment, or rather no respondents chose cross-border payments when asked to describe the chief benefits that they imagined from a CBDC. And so despite this, though, there remain concerns around the risk of poor quality stablecoin and the prospect of financial instability due to dollarization dynamics. So we look at this chart and we see that central banks recognize some of the merit of stablecoins, but nonetheless remain cautious about the risk of a stablecoin that's potentially not properly adjusted or properly implemented. Now, in this next slide, we look more closely at the question of cross-border payments, which features very heavily in our report. And here we ask respondents what they think the most promising avenue for improving cross-border payments is. And perhaps unsurprisingly, because this is a survey of central banks, our respondents tend to think that the most promising avenue for supporting cross-border payments involves interlinking CBDCs. And in this regard, in the report, we highlight some of the key initiatives on this topic. So we discuss at length initiatives such as Project Dunbar, Project Lion Rock, mBridge, and Project Jura. And each of these provide an effective example of how countries are hoping to interweave their CBDC systems to support transfer of currency between locations. But as mentioned at the start of this presentation, our report really does go beyond just digital assets, especially when looking at cross-border payments. So for instance, we also look at the emerging regionally integrated payment networks. And this includes TIPS Target, it includes the Pan-African Payment and Settlement System. And such initiatives really illustrate the promise of regional projects, which could be very exciting for developing markets in particular. But given this, we really want to explore in this report as well, what would a CBDC actually look like when a central bank is successful at implementing it? And so in our next chart here, we look into greater depth, asking respondents for more information on both the type of CBDC that they might deploy and also who they would be working with in deploying a CBDC. So in this chart, we can see that collectively, 89% of our survey respondents plan to implement a retail CBDC rather than just a wholesale CBDC. And these results appear generally in line with the stated goal of central banks around improving financial access, cross-border payments for migrants, and improved dynamism of global payments and transfer system. Now, given the clear caution many central banks have about moving too quickly and implementing a CBDC, it makes sense too that they would be collaborating with several partners. And this is why third parties are so important for central banks when working to develop a CBDC and a retail CBDC at that. So in this last chart that we're going to show here, we look at central banks' current use of third-party support as well as their expected use of third-party support going forward. And we can see here in the blue and gold bars, respectively, that technology providers and commercial banks are widely expected to be used or are currently in use, which makes sense given the technical requirements, the infrastructure, and the data management protocols that central banks must work to implement in order to have an effective CBDC. But what's also interesting here is the growing interest in academics and lawyers, which possibly offers a sense of the emerging legal, moral, and political considerations that many central banks and governments in general have when considering whether or not to implement a CBDC. Now, this report really does go far beyond CBDCs and the digital asset space. And we strongly recommend you check out these results, our report in general, and our underlying data in greater depth by looking at the report. So I'm going to leave us with a QR code and link which you can use to access the report. And with that, I'll just say thank you and turn it back over to Katie Ann for the panel discussion.
Thanks so much, Julian. Some really, really interesting takeaways there. I think one that stands out to me is the majority of central banks believing that interlinking CBDCs hold the most promise to improve cross-border payments over, harmonizing standards and interlinking RTGS systems, which we will delve into further during this panel. So it's my absolute privilege to introduce the panel we have here today. We have Sonia Davidovic, advisor for the Bank for International Settlements, Saskia De Volder, Strategic Program Director for Cross-Border Payments from SWIFT, Robert Clarkson, Chief Revenue Officer from Payoneer, Chad Harper, Senior Fellow from the Visa Economic Empowerment Institute from Visa, and Simon Chantry, CIO and co-founder of BIT. It's now our lovely task of looking firstly beyond CBDC and exploring the wider future of payments landscape. I think firstly, looking at some of the challenges that exist with upgrading existing infrastructure in cross-border payments. I think we'll focus on cross-border first because they're so much more complex than domestic payments. We all know that it involves different legal regulatory structures, more than one currency, different time zones, several intermediaries. And there's really, really been less of an impressive development on the cross-border payment scene. We would assume that given, communication cross-border is quasi-cost-free, that this would have improved international payments, but we're just not there yet. So just before I hand over to Sonia on why this is and some of the challenges the BIS are looking at, I want to just quickly tell the audience that we're launching our first poll. Please do, look at the little box on the side and let us know your thoughts on the biggest barrier to improving cross-border payments. We've got harmonizing regulatory frameworks, collaboration between the public and private sector, international standards for new payments like CBDCs and stablecoins, upgrading existing infrastructure, harmonizing data, and FX liquidity provision and transparency. So let us know. A lot of some of the points there Julian had addressed already. So Sonia, I would love to kick off with you first. Can you just give us an overview of what the BIS is looking at in regards to cross-border payments and some of the key challenges that you're looking at?
Thank you very much, Katie Ann, and thank you for the invitation. It's an absolute pleasure to be on this panel. So you have already mentioned a few of the challenges that we're faced with when it comes to cross-border payments: the long payment chain, the slow speed, the high cost, the number of intermediaries, regulatory fragmentation, and then of course systems that are not interoperable as they were designed with a domestic focus and when they were first set up. So the international community has responded to that most effectively through the G20 roadmap to enhance cross-border payments. And that roadmap looks at 5 different areas. And I want to say that the BIS Innovation Hubs have been most active in the focus area E, which is looking at new infrastructures and arrangement to solve for to enhance cross-border payments. And this, within this focus area, there's 3 building blocks, and 2 of them are most noteworthy in our context. One of them is exploring the feasibility of multilateral platforms to enhance cross-border payments, and the other one is factoring in an international aspect into the design of a CBDC from the outset. So there are a couple of projects that are looking at the multilateral platform in building block, most notably Project Dunbar, Project Enbridge, that are trying to provide or prove the technical feasibility of multiple CBDCs being traded and settled within that platform. There's a number of reports that have been issued, but of course, this is just 2 of the projects. This is ongoing work. There will be more, and that's going to be explored within that context. Obviously, a platform we were able to prove the technical feasibility of it, but there's more open questions around governance or pertinent regulation, and needs to be resolved in the context of these platforms. And then we're also looking at this international aspect of designing a CBDC, which are projects like Rosalind, projects like Project Icebreaker. They're looking at a hub and spoke model for interlinking retail CBDC, a Project Rosalind that is exploring connection via APIs for the distribution of retail CBDCs. So these are just some of the examples of how we're working towards a common goal, or public good, I should say, of improving cross-border payments.
Thank you. That's an extremely useful overview. I want to come on to Saskia now on SWIFT. So Saskia, if we look at some of the existing architecture, Sonia's just given us a really good overview of the upgrading, new infrastructure. What's been done to sort of address the upgrades in existing cross-border payments infrastructure, and what have you been working on?
Okay, thank you very much for the question. Yes, so indeed, the G20 set out these challenges, and if we want to look at what are the hurdles actually in the existing system, and let's talk later indeed about CBDC and future systems. But if we look at the existing systems, actually, the processing itself between the sending bank and the beneficiary bank is not that long. You know, the G20 is asking 75% to be executed within the hour. Well, I can say over SWIFT, 84% is executed in the hour. But I think the G20 wants to look further, wants to also have the money available to the consumer or the corporate. So having the money deposited on his account. And that is where that last part where we see a lot of hurdles. We can see the flow over the SWIFT network from the sender to the beneficiary. And I think, first of all, I keep hearing everywhere that there's so many intermediaries in the middle of all these transactions, and that was probably true a long time ago. But today we see that actually more than 74% of them have only 1 to 0 intermediaries. So that flow is not that long. So hence also, I think we're speeding up these transactions. But what are then the other hurdles at the end of a transaction? And I think the biggest one that we can identify is capital controls. Still, a lot of countries have different forms of capital controls. And if we compare those countries to countries that have much less of these controls, we see that the difference is 3 times as large. So it's going up to easily even 24 hours to pass these capital controls. What are other issues? Batch processing still happening by a number of banks, or they are not 24/7 processing. That is, of course, more in certain regions than in others. If you look on time zones, play a little role as well, with RTGS systems, for example, not always be available. But if we look at what the industry has already done or is doing, I think today there's a massive digitalization going on. Everybody is influenced by new technologies coming on board. If you think about AI, if you think about DLT, AI being used to speed up compliance, as you mentioned in the beginning, FX, compliance, all these things make a cross-border payment different from a domestic payment. So there's a big push for using technology to speed up compliance requirements. The market is moving to ISO 20022, using a new standard, but more importantly, I think a lot more data in the standard, because technology allows that now. More structured data, again, helping compliance, helping. Then the industry has been working on pre-validation. So making sure that all the information is pre-validated upfront before actually the transaction is sent. And hence the speed of the transaction is heavily increased. So we see, everybody looking at interlinking actually of instant payments, but I didn't see in the survey coming forward. I saw that interlinking of CBDCs and RTGS, but not of instant payment systems, because instant payment systems could somehow help with the settlement issue of RTGS systems not being available 24/7. So I do believe there's a big flow in the market. There's a lot going on. The only consequence we see is that there's going to be much more fragmentation. and continued probably fragmentation. And if we then talk about future payment means as well, that fragmentation could be coming even more. So we'll have to, and we can discuss that a bit later maybe, but we'll have to focus on guaranteeing still interoperability between all these wonderful new systems coming along and the existing systems being upgraded.
No, so a lot going on currently, without I suppose jumping ship to a whole new setup. I just wanted to ask just a short follow-up on if there was a concrete reason why you thought there was this decline in intermediaries. I think that's a really interesting stat. I think you said 74% now only involve one intermediary.
Yeah.
Is there one or causes for that? Is there something that you can pinpoint?
No, I don't think there's anything specific. I would say that, of course, everybody tries to deliver the best service. So I think banks are really doing their efforts. It's, of course, easier, I think, by technology as well to reach everybody.
Okay.
So I think these things help. And, it's an evolution that is going on, which probably will continue.
No, it's really interesting because I think we are probably all a bit set like a broken record saying there's so many intermediaries. Actually, you're saying there's not, which is really, really interesting. So I want to move on to Robert now. We're doing a nice tour of the different types of cross-border payments here. Robert, let's look at business-to-business retail payments first, and then I would like to move on to remittances because we've got Chad here, our expert, so we can really cover the huge landscape here. So on the B2B side, obviously costs from liquidity to FX to compliance, you have these huge barriers to entry, and I think it makes it hard for less profitable customers to get business. So I just wanted to ask you, what are some of the main challenges in regards to competition and reduction of costs in the B2B world?
Sure. Well, thank you. And thanks, Katie, for having me on. This is great. And the presentation was amazing at the beginning. I think you bring up a really important point. Like, as the world continues to become more global and you see a lot more B2B traction, you start to see the vast differences between the resources of the payers and the receivers. In other words, the kind of resources that a multinational corporation has to understand the economic, the regulatory environment, the financial environment versus what a small business would have, right? So in many cases, a small business's primary function is survival, right? If you look at Maslow's hierarchy of needs, they're down in the food, water, shelter category, not in the self-actualization category. Whereas a multinational organization often has multiple resources, not just legal and financial, but expertise around the world that really understand kind of the interworkings of payments going from one country to another or from one currency to another. So I do think that one of the responsibilities that we have moving forward, and again, this is kind of where Payoneer plays, right? We have 5 million customers in 190 countries. So we try to understand what these small businesses have to contend with when they sell. But one of the things we need to do is kind of level that playing field. And in many cases, the technologies that are available today were born 50, 75, 100 years ago, 300 years ago, if you go back far enough. And those restrictions are still heavily localized. In other words, the regulatory environment is very centralized to a particular country or a particular region. So it is very difficult for a small business to try to understand those. So moving forward, and you're starting to see this now, and certainly CBDC is a great move forward, you're going to have this kind of homogenized view of payments. In other words, if I understand it in my own country or my own region, I also have a better understanding outside of those regions. So, one of the things that we're trying to do, and we're obviously seeing it in presentations like this, is how do I break down those barriers? How do we make it more these let's say undercapitalized organizations to be able to compete fairly with multinational corporations where on paper they're not even close to each other. So I think that's a big piece of it. I do think that local banks and local organizations certainly have great local expertise, but when they start to move outside of those countries, and there's about 7,000 trading lanes between countries. Between the, roughly 200 countries in the world, there's about 7,000 trading lanes. Some of them are more popular than others, but again, there's 7,000 combinations, and that's just point to point, and then maybe a couple interim stops. So it is a fairly complex matrix of decisions and regulations that need to be followed. And I think that's where this process moves forward when you see CBDC, and you're starting to see the ability to have a kind of a common element of currencies, even though there's individual components to it. I think that's going to make it a lot easier for these small businesses to be successful. And finally, regulated fintechs, and I think there's a key distinction there between regulated and non-regulated, but regulated fintechs are going to be one at the forefront of helping introduce these technologies to SMBs around the world, right? So the multinational organizations will be ahead of it very quickly, but the SMBs will need to have that kind of expertise brought to them, and that's the role that we'd like to play, and our peers in the industry.
Thanks, Robert. No, really important points you raised. I just wanted to ask, do you think we've made progress with that in the last year?
I think we've made progress in a number of areas, but certainly in the last year, we've seen a lot of acceleration. Now, there's certain uncertainties that we have to overcome too, because at the end of this, at the end of all of these algorithms for moving money is a trust factor. And if you can solve for the trust factor, in other words, I always tell people, like, there's two things that you want to put your full faith and trust in, right? Your health and your money. And if you can solve for that and make people feel comfortable with either the advice you're getting on your health or the advice you're getting on your money, then things move a lot quicker. And I think over the past year or so, and again, kind of blockchain has helped this as well, right? Because it's more distributed, and there's multi-layers in how that might be. The accountability is distributed, so it can't be necessarily attacked centrally. I think that goes to help it. But as these technologies become more and more prevalent, the trust factor increases, and frankly, that will give both consumers and businesses much more faith in the system ahead.
No, really, really interesting. And yeah, it would be good to follow how important blockchain is in that future ecosystem. Chad, let's move on to, I think, remittances, even though there are overlaps between, obviously, what Saskia, Sonia, and Robert have said, but I think it's really important to give remittances special attention, given how important it is to so many people. So I know you've done a lot of modeling on this, you've got your own research and findings, so I'd love to just hear from you sort of how the trajectory is going on digital remittance innovation, and also how we're doing when we're trying to overcome some of the challenges around it as well.
Thanks, Katie, and for assembling this panel. I've already learned a lot from everyone. We in the Visa Economic Empowerment Institute are fascinated by digital remittances, and we've done some work to better understand the progress that's being made to improve the lives of migrant workers and their families back home, and really many countries for which remittances are a bigger flow of funds than foreign direct investment. So first, let me say that innovative money transmitters, whether they are established firms embracing digital business models or whether they're new digital first firms working together with innovative money movement networks, do seem to be having a measurable impact on remittance costs. So this is great news. In the most recent World Bank quarterly report on remittance prices from the second quarter of this year, global average costs for a $200 transfer moved down to 6.01%. Now that's the number you will hear most policymakers mention. And it's still higher than we would all like, but the news is better for digital remittances. The digital remittances index stood at 4.8% in Q2. That's much better. But the global smart average for Q2, that's a cost that a savvy consumer with access to good information could pay, came in at 3.35%. And that's great. And it's getting really close to the UN Sustainable Development target of 3% to be achieved by 2030. So the World Bank data show good progress, and this aligns with research that we in the Institute did earlier this year. We gathered data for digital remittances initiated with cards. and found that the average cost in 25 key corridors was 3.89%, which is, again, not far from that 3% target. But the more important figures are derived from the best costs we were able to find in each corridor. Since this represents, again, what a digitally equipped person could find if they were able to compare a few money transmitter options. The Institute looked at the best cost a user could find in these 25 corridors, and the average of these best costs was just over 2%. So while the average cost was 3.89, we could find a cost below 3% in 20 of our 25 corridors. So this is a great trajectory, but what needs to happen to continue these positive trends? Well, the pandemic accelerated the sending of digital remittances, but still only a third of remittances are initiated digitally, and only a third of those are digital end-to-end. So we need to get everyone equipped to send remittances digitally, and we have to enable the cashless receipt of remittances in more and more places. So while more and more remittances are digitally sent from G20 countries, they're still largely picked up in cash by families in low and middle income countries. And money transmitters maintain large partner networks for this cash out at receipt, and this adds costs that tend to be borne by everybody. So expanding digital receipt is crucial, but not easy, because the receiver will need to receive funds in a method that they can spend in their everyday lives. So the private and public sectors need to work together to drive digital ubiquity and thereby, enable a more digitally inclusive economy. I should fall silent at this point, but we have some ideas for how to make progress here, and they can be found in the remittances insert in your report coming out this morning. And we expand on the ideas in more detail in a paper, a larger paper we published in October.
Thank you. No, that's some really useful findings there. And I think just if I could try and sum up, then it really is a case of financial inclusion and making people more digitally active and enabled. And it's not just unbanked, it's underbanked, and it's all those key issues that we need to address to, I think, really hit the target. But that's actually really positive news. I feel like I'm hearing a lot of positive news about cross-border payments, which is unusual. So it's very, very pleasing. So Simon, I'd like to turn to you now. Just before we go on to CBDC, I know you've done some hugely exciting projects on this, but just, I suppose, from your perspective as someone who's done a lot on the domestic landscape with various central banks, what do you see as sort of the key, from hearing everyone say their part, what are the key issues in the cross-border payments landscape that lags it behind domestic so much? Like, why is it always so under-impressive often what we do in cross-border payments compared to domestic?
Hi, Katie. Thanks for having me. That's a very difficult question for me to answer. I mean, as you know, so what BIT offers is like a full-scale digital currency management solution, right, for central banks and financial institutions who are deploying CBDCs or regulated stablecoins. I think when we look at the problems or the challenges in cross currency and cross-border payments, we're looking at basically technology upgrades across the board. This is a financial system that has evolved much like many other systems on the planet. So as we move into an increasingly globalized and internet-based economy, this is just one of the changes and upgrades that are sort of necessary to realize the efficiency gains that have been sort of discussed in the research for the last 6 years. I think I always come back to interoperability as key, and I know we say that, and it means quite a few different things. How we've handled it with our digital currency management system is the ability to integrate our tools, primarily for monetary authorities, but also for financial institutions, to integrate with multiple underlying transaction networks or ledgers, both legacy and modern transaction systems. And this enables both multi-currency solutions as well as the ability to mint and issue currency on multiple networks, as well as sort of defining standards and those exchange tools that can enable sort of, some of the technical solutions we're seeing, like hash time lock contracts and efficient ways of exchanging digital currency units with one another. So getting a head start on interoperability from the perspective of standards and collaboration is super important for us, and getting central banks and financial institutions sort of, I mean, you can see from the polls at the start, the research, there's a lot of research going on. There's a lot of efforts moving in the right direction. And I think that this is one of the key areas that the central banks and financial institutions are paying attention to. Now, when it comes to driving efficiencies in these exchange markets, obviously a lot of it is driven by liquidity, and where does the liquidity reside? Which venues have the most liquidity? And yet there's also technical components. So it's this interesting combination of how can we ensure the technology is evolving in the right direction, and having that sense of global collaboration to define common standards, while also being practical about where the liquidity resides, so that there can be access to this liquidity, but with common technological infrastructure. I know that's a bit of a roundabout answer, but it's this is sort of how I see the space.
No, it's extremely useful, and I think it actually leads well into the poll results. I don't know if we want to have a quick look at them actually. So we've got some feedback from listeners. With people have voted that harmonizing regulatory and supervisory frameworks is the biggest barrier to improving cross-border, and then the second is new standards, as you were saying, Simon, for CBDC. And then below that, upgrading existing infrastructure, and beyond that, data. So that's quite interesting, actually. What are people's initial thoughts? Saskia?
Well, I don't see the poll because I'm on my iPad, but if I listen to you, regulatory on number 1 and ISO 20022 standardization on number 2, I can only, I think, fully agree with the audience, which is, and as I said, there's that makes it so complex, cross-border payments versus those domestic. So if we can get to some more harmonization of the regulatory requirements, I think Simon just said technology will help as well to do screening, to help, fraud management, all of that. But so if we can work together between the public and the public sector to push forward in more standardization and harmonization of standardization, and then harmonization of the whole regulatory requirements, especially in those markets that have heavy regulatory requirements, I think that really would make a difference, and we can only do that all together.
No, definitely. And I want to, Sonia, what are your thoughts then on harmonizing the regulatory framework as the top?
Yeah, I mean, it's really definitely tops the list of issues that need to be tackled. And I think one of the focus areas in the G20 roadmap is precisely that. But I think although the most important, probably also the most difficult task on this list, because the number of projects that I've mentioned earlier in my initial response, it has shown the technical feasibility, but the problem area that requires really a long-term view. That's something that we can certainly not something we can resolve in the short or medium term. Is precisely alleviating this compliance burden along the payment chain, and that will mean that we'll have to come to some least common denominator among the policy makers and regulators as to how to tackle that. I mean, we will not be able to do away with exceptions, because jurisdictions, legislation is always like sort of an expression of the culture or the cultural background of a country, and there's good reasons why some countries have protective measures, capital flow measures in place to protect their economies from adverse effects that capital inflows or outflows can have on their currency and can have on their wider economy. So we have to be always mindful of those exceptions when we're talking about regulatory and policy harmonization. I don't think that we will get to a state where we can harmonize to the extent that there's no more differences among the individual jurisdictions we're dealing with. But certainly there's ways to, and this is what I think is the most promising area, where we can say, okay, let's see how we can reduce the number of compliance checks that we have along the payments chain. How can we standardize, like, for example, the financial integrity standards come to mind. Each bank that is involved or each stakeholder is involved in a payment process possibly has to do the same check over and over again. So that is something that perhaps, where technology can certainly support, but it cannot resolve this issue because, it can support the process. Like, I would leave it at that, but I don't think that we can expect technology to solve for the conundrum and the complexity around policies and regulatory frameworks that countries put in place.
Yeah, no, certainly. I think that's a very, very fair viewpoint and more realistic than expecting perfect harmonization. Robert, did you want to comment on the poll before we move on?
Sure. I would say that there's, again, kind of the way we talked about small businesses and large businesses, I think countries face the same competition or certain relative position, and that one of the things that whether it's technology or transparency or just broad adoption, the thing that we need to address is leveling the playing field for all countries. I think people will participate much more freely and actively and with a sense of urgency if they feel like the system is not geared towards one type of country or one type of solution or one ideal, right? This finance and cross-border payments has to sit on a plane above individual regulatory needs and create kind of a common playing field. And I think that's already starting, and you're starting to see that now. But the more that you can show that small organizations, small countries, small trading lanes have the same advantages and have the same access as large organizations and large companies do, I think you're going to now start to see that kind of adoption in a much quicker fashion, because there's a natural skepticism that one, if I don't understand it, I'm not sure I'm going to participate. And if I do understand it, do I know that I have the same chance of succeeding as other countries do or other regions do? And I think if we can establish that through both, regulatory component, the technology to support it, and kind of constantly reinforcing the trust in the system that it is not a central theme that is distributed out, but it is a global theme that this is an important work. I think we're going to be in great shape.
No, definitely. We've got quite a lot of questions coming through already, actually, which is great. Simon, I want to turn to you for this one, from Jan from the Czech National Bank. He's saying, I think it kind of builds on your point on you have to add standards into CBDC for cross-border early on. He wants us to address, if you've got different countries running CBDC on different technology, we need a sort of bridge. Any idea on such a bridge for cross-border payments in CBDC? And Sonia touched upon this, but if we could just expand a little bit.
Yeah, so this is a challenge that we've seen so far in some of our domestic deployments, where we need to ensure that there's a bridge to legacy systems, just in the context of converting between deposits, for example, and CBDCs. And yet, because it looks very likely that it'll be a multiple layer one future, right? That CBDCs will be issued on multiple types of underlying ledgers or transaction networks, that bridges between them are going to be necessary. And so I think, again, as we get a better view on which of those L1s is going to win out, obviously we hear the most common names coming up: Hyperledger, Corda, Quorum, now with MIT's Open CBDC TX making some pretty solid progress. I think what we'll have is access to bridges between each of those sort of highly performant and most used transaction networks. One of the elements that I like to consider is which parts of these solutions should be open source and accessible, and following from the open source collaboration that we've seen has played out with great success in Web3 and crypto. And so I think bridges are potentially one of those areas where it makes sense to have collaborative development resources and coordination amongst the central banks and countries that wish to trade with one another, and to have efficient interoperable bridges. So I think that could be one. I'm always looking for sort of areas where open source makes sense, and then where does it make sense, you know, to build out our own digital currency management system and build our own IP and whatnot. And so I think the bridges is potentially one of those open source collaboration areas. I think the BIS is doing great work testing out different models, and so, you know, we're super excited to stay in touch there. I hope that answers your question. I think it's there's an interesting opportunity there for collaboration and open source technology development.
No, certainly, and I think your piece in the report as well gives a good sort of overview of different criteria for various transaction networks that central banks should be looking at, which is, I think, a really useful tool in that regard. We've got a couple of other good questions. You know, and the obvious question that I think we should try and address is what can CBDCs actually do that other improvements cannot, like instant payments and so on and so forth. So I think, I suppose, to answer this question, then I might turn to Sonia and then Saskia as well, and Chad, to give us some ideas of, I suppose, the use cases cross-border and what it could do, what it can't do, and what it can do, basically. Who should I pick on first?
Yeah, I can get started, and then perhaps the others want to chip in. So I think that what CBDCs can do, what other solutions can do, is provide this role of a monetary anchor in a digital economy. That is something that is very important. Robert mentioned trust a couple of times, and I think it's fair to say that public money in digital form will be able to provide that trust. I mean, for most part, I know that like people will know exactly what the value is of the digital asset they're trying to exchange against another. They need an anchor to be able to do that, right? So this monetary anchor role in preserving the monetary sovereignty of a central bank to conduct monetary policy in the digital economy is going to be vital. When it comes to other use cases, I mean, there's many others. Yeah, financial inclusion, payment system efficiency, financial stability. Yes, one could argue technically, if you have a good working instant payment system, like you may not need a CBDC. But I really do think it's become more about this safeguarding monetary sovereignty going forward for the central banks and ensuring that that trust in the value of the currency continues to, or perseveres basically in the digital economy as well. So that is the short answer to your question, but I'm sure others will have a view as well.
Yeah, certainly. Do you not think there's a slight, and this is also for the wider panel chat as well, isn't there a slight difficulty then for a central bank? Because obviously they want to preserve monetary sovereignty, but then if they do enter the retail payments market and compete with private sector, you could end up pushing some of those private sector offerings out. So I think there's kind of an interesting juxtaposition here between still giving central bank money and competing with the private sector, which I don't think the central banks want to do too much.
Yeah, I don't think that I have yet to see a CBDC design out there that doesn't have a role for the private sector to play. Like, I mean, for most part, financial institutions are tasked with the distribution of the CBDC. In the case of retail and wholesale, that will be the case anyways. There's payment system providers that are, providing wallets or, have the customer-facing solutions, and may or may not be the financial institutions that are distributing the CBDC. Then there's like a plethora of technology companies that are offering their technology solutions. So I do think that central banks keep the private sector very much in mind when they're distributing the CBDC, and I think or when they're even talking about issuing it, right? And I think that is certainly a headache for every policymakers, because the design features of a retail CBDC, for example, have to be such that they don't compete with the financial sector and potentially intermediate it. So if somebody asks me why is it taking so long to issue a CBDC in production? Well, the most obvious answer is because it's very hard to tell what the impact is from financial stability, what the impact is on disintermediation. And so policymakers are rightly cautious in their approach and thinking through all the possible design options so as to not have cause harm, not just to the economy at large, but also to their other policy objectives, right? Because the central bank has a specific mandate to safeguard financial stability and keep the prices relatively stable. So that's something that causes a lot of headache. It's not an easy task. So certainly these things just take time to design properly so that we don't have those adverse impacts that you just mentioned in your question.
No, of course. And Chad, thoughts?
I was a central banker for nearly 20 years and spent a decade of that in the U.S. Federal Reserve's cash function. So public money is still dear to me, and CBDC is digital public money. And near term, I do think that a lot of the use cases of a CBDC could be met by the newer, faster payment systems that countries have introduced, and private sector solutions for that matter. But longer term, a CBDC would allow you to have features like programmability and enable perhaps smart contracts that the instant payment systems would be more limited in. So I agree with Sonia that that the design of CBDC is leaving room for the private sector to really help any CBDC become successful, because you need adoption and acceptance, and the private sector would have a lot to add there.
Yeah, definitely. Saskia?
Well, first of all, I want to say indeed, and I think the two speakers, Sonia and Chad, already said it, there has to be a working methodology between commercial bank money and central bank money, which is today there already, in whatever form or shape, because the world's economy needs, I think it's about 80% commercial bank money, 20% central bank money. So the world economy does need that commercial bank money to function. But indeed, CBDCs could help with the settlement part, which is where actually that central bank money comes in to ease that. And to the earlier point, I think, made by Simon, is that it's crucial, and Sonia as well, sorry, is that it's crucial indeed that from the design, everybody thinks about the cross-border part. We were talking just 5 minutes ago about the existing systems. They were built really for the domestic market. So even though a CBDC is, again, normally focused on its domestic market, but let's already think out a little bit together what it needs to have as elements as well to guarantee an easier interoperability. And I think, as Simon said, also SWIFT, we demoed, the BIS Model 1 and Model 2 technically. How can you make guarantee interoperability between different DLT systems, but also between the DLT systems used potentially by CBDCs and the existing system, because people might still, use the existing system. It's not going to go away in the next few years or be replaced. So how do we guarantee that interaction? Because in the end, we need to look at what the customer wants. And the customer wants to, do a payment. He doesn't really care what is the underlying technology or the underlying application being used. He wants to have the guarantee that if he sends it in a certain way, that it arrives in the other way as the customer wants it to happen. So that's why I think it's important, and that's, we have as SWIFT no remit about CBDCs. We see them, largely coming up in different forms and shapes, and that's fine. What we try to do is build a kind of a sandbox in which everybody, and we see commercial banks, but you also see central banks like Banque de France and the Deutsche Bundesbank. In that sandbox, they test not only technicality, if it can work, because we all know that technology can make it work, but it's also about, the business rules, the way you want to guarantee that interoperability between the systems, but also, and I think to the elements we talked about very early, in the conversation, the same elements will come up here.
Yeah.
Compliance, there is FX to be done. So how do we do that efficiently with this outcome of these new payment means? Because it will lead to more fragmentation, and that's not what the customer wants. He wants to guarantee interoperability between those different systems. So that works together on guaranteeing that for that customer or that corporate that is actually the one behind all those payments.
No, exactly. You still need to solve these problems. You still need a competitive FX conversion layer. You still need correct data format. So it doesn't solve everything, but
yes,
you're starting fresh, I think is what you're saying. And then you're
starting fresh and correct. And we want to guarantee, like we've done interoperability, because correspondent bank, you can say it's slow, but it has proven, its value over the last years. But indeed, it has to improve, it has to modernize. But like if we look at CBDCs, we're looking at, new gateways to build that bridge between and these technology layers, different DLT systems, as mentioned earlier, or these new technologies and, RTGS systems, because they're out there, they're migrating all to ISO 20022, so they're upgrading, they're designing new settlement models like PVP. So how do we make sure, and that's where, generally SWIFT comes in, we have built that bridge, what was referred to earlier as our connector gateway, to make sure that interoperability could be there for the future when these CBDCs come out.
Definitely. So I want to bring in a couple of respondents that we've got in the audience that I think would be really useful to hear from. Dave Sisson, CEO of RTS Global. I think you have a crucial question for the panel, and I also want to invite you to comment on anything that's been discussed and to hear your thoughts. Dave.
Yeah, thank you very much. Interesting insight from all of you. So great panel, thank you. I've got a question, I guess, best aimed at Sonia. I'll probably precursor my question as it's more wholesale focused rather than retail focused, but it will become apparent. So we've got the BIS innovation hubs all around the world, fueling projects to find solutions for the current cross-border friction problems that we're all aware of. And many of these are really anchored in CBDCs and others imply the use of DLT for processing. However, implementing such fundamental change on a global scale will result in hundreds of transitional and interim stages, which of course brings risk and cost to stability, as you highlighted. So I guess my question is this then. To what extent do the BIS see that there may be opportunities to innovate with fiat currency using what we have today, and as I say, mainly wholesale focused though, but also using that whilst leveraging existing banks and financial market infrastructure that we have? So does the answer have to be CBDC in order to solve some of those problems? And do the BIS see that there could be other alternatives?
So if you ask me personally, I do not think that CBDC is a panacea solution for every single problem that we have all identified in this panel and that is well known to everyone. But certainly what CBDC offers in the cross-border context is the safe settlement asset, and then Saskia alluded to it just in her previous response. And that is something that is very appealing to in the cross-border context, because we know that when prices are discovered and formed, settlement risk is one large portion of it, right? So we're alleviating that burden at the very least by providing a safe settlement asset. But I would repeat what I said in the retail context, also in the wholesale context as well, because I don't think that central banks can go this path alone. It's very much clear that there's a need for collaboration with the commercial banks, with existing infrastructures to the large extent. We cannot expect that there's going to be one solution to rule them all, and then it's going to be developed by the public sector, and then it's going to be based on CBDC. It's just not realistic. What we can see, though, is that there's going to be different ways of how we, for example, trade and settle FX. So there's going to be innovative solutions around that. So perhaps, and I'm just speaking about this hypothetically, we will continue to see liquidity provision done by financial institutions, commercial banks, because they are closely involved in FX trading and settlement, as is a very efficiently functioning market, at least for the freely usable currencies, the highly liquid currencies. This is like highly automated, at least a trading piece, by which like CBDC can add value is for the settlement leg of the transaction, the wholesale cross-border context. So I do think that there's value add from that collaboration where it can pair the efficiency of the FX trade that the private sector regulated financial institutions are doing so well with pairing it with this safe settlement asset that a central bank could potentially bring, and sort of build out the synergies, build out on that, and whatever the, there's no need to clearly define whatever the construct will be. It will come out of that collaboration, but I do think that there's benefits to be made in the long term in putting the heads together and exploring together which transformative technologies could be used to leverage the competitive advantage that both sides bring to the table, right? Like, it's obvious that the FX market is, working, at least the trading piece, working really well and highly automated. So there's no need to reinvent the wheel there, but rather build on it or explore ways of how some of the problems or the gaps that currently exist can be solved. And that one potential area where I see for CBDC to be adding benefits is this safe settlement asset.
Thank you. Good answer. Thanks.
Excellent answer. Thank you, Sonia.
I'm glad you accepted. I'm just kidding.
I just want to turn to another respondent, Noel Ozumena, that we have on the line from Flutterwave. Flutterwave, I know, is a leading African payments technology company, and we have actually had a few questions on Nigeria come through as well. So Noel, please join the discussion. Please ask the panelists your question, if you're there, Noel.
Hello, I'm here. I've
Hi.
been enjoying the conversation. So I'd like to ask though, I don't know when I'm going to have this quality of people here again. So I'd like to ask, which subsector in the fintech space do you think would drive growth for the industry in the coming years?
What about Robert? I know you do a lot with small businesses. What do you think, Robert, on that question? What subsector of fintech will drive growth in 2023? Payments.
Well, I am predisposed to that answer, but I would say a couple things. One, I think that there's a reawakening in cross-border that we haven't seen over the last 2.5 years, right? So one, just travel itself. Two, the distribution of goods and services is becoming wider. So you had your traditional countries where you had suppliers and then buyers in other countries, and I think the fluidity now is far greater. So there'll be a lot more. You think of freelancers and small businesses, they're starting all over the world. There used to be kind of traditional hubs for that, right? So you think of China, and you think of India, and you think of the Philippines and others, but now multiple countries actually have that kind of capability. And in addition to that, kind of layering on top of that is, with uncertainty in the market, I'm now talking things like interest rates and inflation and others that really have been absent from a lot of business models over the last 10 years. With those coming up, those put additional pressures on larger companies and perhaps drive the innovation out to the edges, out to the smaller businesses. So, one of the things that I think has applied in the last few years is you could build tools for large organizations and count on them for the kind of distribution of those tools. But now you're seeing a much more direct to consumer, direct to business version of those tools, because a lot of small businesses are starting to spring up. The reliance on these kind of large multinational organizations is becoming less prevalent, and you're seeing that in a number of ways. But one of the more obvious effects is you're starting to see layoffs in large businesses. Well, those folks who get laid off tend to be the innovators of tomorrow, right? They take those good ideas, they take those fundamentals that they learned at large organizations and now apply them to smaller businesses that then grow. So I think that's the one trend that we're really kind of focusing on among many, which is, how do we serve those small businesses in a much wider platform than maybe we used to in the past, where they were either geographically kind of condensed in the past, or they, freelancers came from this part of the world, suppliers came from this part of the world, coders came from this part of the world. Now all of a sudden that is flattened out across kind of a global opportunity as opposed to regional opportunities.
Awesome, thank you. That makes a lot of sense. We have this interesting story, right, at Flutterwave, where somebody in Nigeria, a small business, they got on one of our tools for small businesses, and they were able to receive payments from as far away as Qatar. So I think that really aligns with what you're saying, and I look forward to more of that, and I look forward to that growth. Thank you.
Absolutely, and just to add exactly what you said, not only are the suppliers and the services diverse, it also opens up the diversity of all the customers that they could potentially have. So it's not just a wider base, it's a wider funnel all over. So it's really impressive. And I think moving forward, especially coming out of an environment where people were kind of locked remotely for 2.5 years, they're thinking of this central is better to a, hey, you know what, I'm gonna work where I want to work, I'm gonna provide the services I want to do and sell to the customers that I find, I think is going to become more and more prevalent.
Thank you so much.
Thanks, Noel, for
Thank you, Noel.
Really, really poignant, actually, and excellent response from Robert there. We are running out of time, which is a shame, so we've got loads of good questions coming in. Simon, I do want to turn to you because we've had a lot on Nigeria, and I think it would be nice to address some of your CBDC project there. Someone has asked, can you speak to Nigeria's move to restrict the use of cash to, they've used the word coerce, which I think is a bit strong, but incentivize the population into using CBDC. So I think maybe a wider point on consumer adoption and CBDC.
Yeah, thanks, Katie. Kind of I didn't see that coming. As you can imagine, we're not involved in a lot of the policy decisions. We're just a technology services provider. I think central banks are going to try a number of different incentives and perhaps restrictions to encourage adoption. Yeah, that's kind of out of our lane at BIT, though. We're technology service providers, and I think what we're focusing on is integrations into their existing systems, a lot of functionality at the API and SDK level, coming shortly, so that I mean, Nigeria has an incredibly vibrant fintech ecosystem, and we're looking forward to having more and more of those firms integrated with eNaira so they can provide those payments. So yeah, can't speak exactly to that action. But I wouldn't be surprised if we see central banks try different creative options to see what's going to stimulate adoption.
So thank you. I mean, it's a good answer to the question, and it's one more for the panel before we end, which I think is an interesting one. Just a quick minute on business model issues, which I think is very interesting. Just to add to the discussion, if the majority of payments, are not cross-border, isn't it natural for infrastructure players to optimize for domestic? Anybody want to tackle that, Saskia?
First of all, yes, I agree.
Yeah.
And that is, But I do think that a lot that can be used for cross-border could also be used on domestic. Let's maybe turn it around, and instead of saying, yeah, this is my standard, let's, for example, take a standard, my standards that I want to use domestically. Well, if ISO 20022 is the one for cross-border, why not use it also on the domestic level, and it helps in interoperability or technology-wise. So I don't think one excludes the other, but so, you know, maybe I think by just thinking it through and working together and think whether the cross-border bit could help also the domestic bit, I'm quite sure that could potentially work.
Yeah, no, exactly. Excellent. Robert, any final thoughts on that view? And also, if you wanted to add, I'm really frustrated we didn't get to cover it, but connected to the metaverse. But I will encourage everyone to download the report and to read Robert's excellent piece, because there is so much. We should have done a whole other panel on that, I think.
Well, there's always the next panel, right? So it keeps the audience involved, right, for the next one. But
yes,
I agree with what Saskia just said. I completely, like, you know, the line between local and global is blurring anyway, and the technologies that invented for one will apply to the other. And you know, in an ideal world, yes, the entire world would have access to everything. We all know, from whether it's regulatory or political stances, there's going to be certain regional sensitivities. So when you build a tool like this or distributed tool like this, you know, yes, you build it for the widest possible audience, but know that it won't always be adopted by everyone in the same way. So you're going to have kind of this local advantages as well, because that's the way people are going to feel comfortable with it, certainly at first, and then they'll broaden it as they move forward.
Certainly. Well, thank you for that, Robert. And yeah, Simon has had to drop off. He's going to another panel. Extremely busy, busy individual, jumping from panel to panel. But this is the wonders of virtual Zoom panels. So I just like to thank my esteemed panelists, Saskia, Robert, Sonia, Chad. It's been an extremely useful tour of cross-border payments, CBDCs, a lot of key takeaways, I think, on practically what realistically we can expect and what we can improve on. I've actually just, we launched another poll, which I think is quite interesting, on whether interlinking CBDCs would solve challenges in cross-border payments for the next 10 years. And 60% of people said yes, and 42% said no. So jury's still out, to be honest, on that one, but we'll still be discussing it. But yes, thank you so much for joining us, and thank you for joining us late at night, early in the morning. And yeah, I do encourage everyone to download the report and read the pieces from this excellent group of people. Have a lovely evening or afternoon, everyone. Thank you so much.
Thank you, Katie Ann.
Thank you. Bye.
Bye.
Bye-bye.